Welcome back, everybody. Sive Morten is here with the ForexPeaceArmy.com. As usual, our daily update on the Forex market, in particular on euro currency. Today we will consider the technical picture and prepare the trading plan for the next week. So starting as usual with the daily chart, but actually, additionally, you have to keep in mind what's going on the higher time frames, in particular on the monthly, because it actually, set the overall background for next direction on euro currency in particular. If you just take a look on the monthly chart, you will see that recent action here represents big bearish engulfing pattern. On the dollar index, it looks even better with a strong upside candle. So if in euro currency this overall candle stands down, on the dollar index correspondingly stands up, and it's really huge, much better looking pattern on the dollar index rather than on the euro currency. And in nearest time, I'm not speaking about the current week, but probably in perspective of the few weeks, everything depends what will happen near the top. Either this pattern will work, and this will be expressed in a kind of the downside A, B, C, D big pattern, and 30% retracement on the monthly chart, which is quite normal, absolutely natural performance in the circumstances that euro currency stands. Don't forget that on the euro currency, we're at a major monthly OP target around 119. We're at monthly overbought. We have the Gartner's triple to sell on the monthly chart. And the 30% retracement is actually the minimum that market usually does in the current circumstances. It absolutely doesn't break the overall bullish tendency that exists. But on the daily chart, it might be rather painful for the bulls, and it might be really strong downside action. So why I'm speaking about this? Because weekly trend is also nominally bearish. And despite that, we've got really superb payrolls, and we have upside action that we were trading in last week. But don't forget, and here we have bearish reversal swing. So we have recent upside swing and downside swing, which is greater than this one. That might be just the rest of the existed upside momentum. Usually after reversal swings, market always shows deep retracements, which we now actually could see. 618 pullback. Market stands here. So it means that despite that overall performance here looks really nice, we have the bullish trend on the daily chart. Be careful with any bearish signs, especially around 618 resistance level. We could probably relax more or less if market will keep going higher and reach the neckline, potential neckline of the possible reverse hand shorts. In this case, market mostly will erase the engulfing pattern on the monthly chart, coming closer to the top, which is invalidation point. But while the market stands at the 618 resistance, this is normal for any ABCD downside pattern. So stands in the point that potentially very sensible to moment of the reversal. So 618 levels, especially when you're getting and dealing with the engulfing patterns, it's the point where reversals happen very often. So that's why on the coming week we have to be extra careful with the performance of the market. Don't treat it as a absolutely clearly bullish background. That might be surprises here. So that's the points that we should keep an eye on the daily chart. Now, by looking at intraday charts, still I'm hope of the natural normal action on the market, because the setup that we discussed on Friday is still valid. You could see that grabbers that we have mentioned are also valid. Market keeps and holds. It's actually pennant shape, which is great, and the OP target has not been reached yet. I hope that market will follow to the normal natural performance. Yes, there might be some tricky things and jokers in the sleeves of the Donald Trump. I don't know what he will do. Powell retirement or something else, some negative surprise might happen that could actually make impact on the market performance. But on the technical picture, currently overall picture looks still bullish, and the market keeps chance on the possible upward continuation, at least until grabbers holds and until it stands in the tight range of the pennant. If you will see that market collapsed, returning back below the support area, returning back in the broken triangle, forming downside reversal swing that might be the bad signal for the bulls, and there's increased chances that all that we said on the daily chart about bearish background, about possible deeper ABCD pattern here, it might be the starting point for that, if you will see this type of action. Normally, as I prefer to see actually here on the market will complete first the OP target, complete the grabbers, and then it might start the bearish reaction if indeed the bearish context that we just have discussed on high time frames is still stands on the back, if it's still valid, which we do not see it. Currently market stands in euphoria of the recent payrolls numbers. This is actually the rest of the momentum of this initial impact here. But it's also gradually fading, I hope on completion, but after that, be very careful to any bearish signs that might be formed here. So currently our task, speaking just simply and short, once the target will be completed, and I hope that this will be completed, our next task is to not miss the possible bearish signs for two purposes. First is to avoid any new longs if market will fail to keep going higher. Second, recognize good bearish stops for possible making the bet on the retracement, on the deep retracement on the monthly and weekly chart. So I'm not totally exclude that it might be really downside big ABCD pattern. That's also possible. What the background will be, currently difficult to say. Maybe negotiations Trump with the Putin on the next week. Who knows what they will agree to. So a lot of different factors might exist here. That's actually what we have currently on the euro currency. It will be really very interesting week. Don't forget that also we will get the CPI numbers. That stands very close to the next September meeting of the Fed, and it might be really have big importance for our next decision. So that's definitely will be something to watch.